All right, everyone, welcome back for another episode of Carnivore Trade. Today is Tuesday, January 25th, 2022. So market's kind of just pausing here. You see this inside day on the spiders here. We're going to see a lot of these charts here today that we're going to go through, and really just kind of waiting on the FOMC, which is tomorrow. We also have Microsoft and Texas Instruments reporting after the bell today, and normally those would be market moving names, specifically Microsoft, but ahead of the Fed reaction. We may get a bit of a muted response, at least in the broad market here, as the market's really just kind of waiting on the FOMC tomorrow. If we look at the spiders, a lot of people are talking about this fake print we got here about 10-15 minutes into the day. This morning we got a fake print all the way down to about 360, about 365 here. And if you take a look at this, this is pretty crazy. So this trend line goes back to, way back here. I've got this one penciled into 2019, and look at this fake print. I mean, that's right, that's right where that trend line is. And I've had this trend line on here for a while because essentially what this trend line represents is mean reversion. If you look at, the kind of trend that the market was following for quite some time, every time it gets too extended, it gets extended here in 2019, 2020, and then obviously it gets really extended on the downside in early 2020, and now we're just super extended from it here in 2022, and it's like, wow, is this telling us something? But pretty crazy stuff here to see that fake print here go on the spider. So I'm getting it on the weekly, I'm getting it on my intraday as well, and don't have it on the daily chart though. So at least the daily chart is clean for us to look at, and it seems like everybody's gotten it too. So it was all over Twitter. I had people messaging me about it. Did you get this? Did you get that? So pretty crazy to see that fake print there all the way down near that 360 handle. You can basically see where it went to by this trend line here, and that would be a pretty amazing move. So this is where we consolidated to. It's also right near a previous all-time high, or just above a previous all-time high. So if we got down there, that would kind of be a really good support area at the very least, but just nuts to see that. Anyway, so tomorrow, we talked about this yesterday, the sell-off here, we don't really believe it's a tantrum. So we're hearing talk about, is the Fed going to back down because the market sold off? Now it's not really, we don't think it's that. We think that this is more of a repricing. The Fed left rates too low for too long, and this is what happens when the Fed does that. It has to be corrected very sharply. So we don't expect the Fed to back down, and that may cause an initial knee-jerk reaction. So we could get a sharp sell-off, a sharp move down after the Fed announces that. But I think that will be bought pretty immediately, and that will probably put us in some sort of bear rally that could last probably 2 to 4, maybe 6 weeks at the most, I think. And then I think it's we're probably going to take another leg down now. Market's not going to go straight down. It's not going to go down right away. The size of this tail candle with this volume, you can't just take that out. It's not just going to go. It's not just going to sell off and go straight down. If we look at the IGV, you saw this. I mean, look at this move here. This sharp move down. We had these 2 tail candles in a row. And you came back up. You hit double bottom. Then you had to make a lower high, and you had to come back down. And then the same thing. You had a big tail candle. You had to come down, lower bottom, put in a bear flag, and then you had to move down. So markets don't go straight down. I know a lot of people are bearish right now, but the market can remain in a bear mode and still get rallies. So it's very important to realize that. It's also very important to realize that the smart money on Wall Street knows probably what the Fed is going to do tomorrow. And if we do get a knee-jerk reaction off of that is a sell-off, it's probably going to get bought pretty quickly. At least that's my thesis. That's just kind of what I'm going with. It's my opinion. Anything can happen, but that is what I think is the highest probability. But anyway, so we took a look at IGV. This having a nice inside day here. Semiconductors as well. I'm struggling to hold that 200 moving average, but again, it's inside of yesterday's candle, and we're not going to make too much out of it. It's again, the market's just waiting on the FOMC, so we're not going to, get too crazy here with analysis today. It just looks like a pause day for me overall. Take a look at the Russell 2000. This one, again, we noted this yesterday. The Russell has been holding up better than some of the other indices. That is a bullish development. Nice inside day candle, a little bit of a pause here. And the Dow also the strongest. Again, 30 blue chip stocks are going to hold up better in this type of environment. We know that. Dow actually took out yesterday's high and was positive for quite some time. If we look at the diamond here, did get all the way up to that intraday 200 moving average, now pulling back a little bit as the market kind of peels back a little bit here as we get into the close. But, you know, Dow showing some strength and some leadership there as to be expected. So let's look at yields here. So obviously yields are all important right now, and they are going to move tomorrow, regardless of what the Fed says. But look at this bullish pattern here on the weekly. Nice bullish, starting to put in a bullish inside bar on the 30-year, as well as the 10-year. And the 10-year putting this bullish inside bar in right on that 200 MA. So again, you know, we've been talking about this. Yields are going to make another leg up, probably to 2.1% on the 10-year before we majorly stall out. Now, it doesn't mean we can't move higher later on, but I think in the near term, that's kind of your major upside. And it's possible we get there, you know, maybe over the next couple of weeks, but maybe it takes a little bit longer, you know, to consolidate through that resistance area. But nothing wrong with the pattern overall that yields are printing on right now, just doing some backing and filling. XLF showing some strength today. So green on the day, starting to reclaim that 200 MA, reclaiming that little trend line there that we've been following. So nice move there for XLF. Broker dealers also with another tail candle. So this is telling you that there's some support down here. When you come back down here and you have a tail candle like this, and you have another one the next day with a higher low, that's telling you there's buyers down there and there is support. So again, you know, you can't just take out, you know, look at the spiders here again. You're not just going to take this candle out. I mean, even if there is some bearish development that comes out of tomorrow or we have bad earnings, I'd be really shocked if we just took this candle tail out based on the action that I'm seeing in a lot of these sectors, especially financials. You know, JPM getting a nice bounce off that 140 area. Told you that was where it's going to go. Got a nice bounce off of that nice candle it's printing there. Goldman with a nice power move off of that yesterday. Still a little bit of an inside bar there. You know, BlackRock up 1.5% today. Nice reversal candle there. So we're seeing that in the financials. Also the home builders, we talked about those last couple of days. Nice power bar and an inside bar here, starting to develop on the home builders. Also VNQ, the real estate, nice power candle yesterday. Could not reclaim the 200 moving average, but you know, it's hanging in there. Again, another inside day, and we're seeing this across the board. The real strength in the market right now is energy, which just continues to be powerhouse. XLE up almost 4% here today, testing the highs. Look at this little drop and pop setup. So coming off the highs, hitting that 20 moving average, and just a power bar off of that today. XOP with a nice rebound as well as the OIH, oil services here. Nice power bar, testing the highs, the recent highs anyway, as well. And crude also with a nice bid today as well. Again, crude is held up really well. And, you know, this, I knew this area was not going to be, you know, I knew it was a good level. I just did not really feel comfortable taking a short here. Just energy is just too strong right now with all the geopolitical events going on at the moment. Nat gas also kind of just hanging in there today and possibly building a, you know, a slight little bearish kind of bear flag inside bar here. We'll continue to watch that one, but nat gas is scratching out a gain, at least in the meantime. Let's look at the dollar index. So dollar green today, although coming off the highs pretty sharply, but basically finishing flat here. Again, this area is where you broke down this red bar high, and you went kind of straight into that. So no surprise, it's pulling back a little bit. May need to do a little bit of sideways consolidation, a little bit of backing and filling, but ultimately nothing wrong with the weekly pattern here on the dollar. So just getting a nice juice off that 20 MA. Let's flip over to gold here. So gold continues to remain strong. Again, continuing to be a risk-off play, but it is tagging this upside trend line, and we'll see what it does here. We'll see if it gets a reaction off of that. Maybe it goes sideways a little bit further and then tries to attack this area. But that's going to be the real test. If it can get through that 1870 area and this trend line, then, you know, maybe it's, you know, I hesitate to say that it's poised for another leg up because this is a lot of resistance, and with the FOMC tomorrow, there's a lot of things that can happen. I would not be long or short gold going into the FOMC. Just let the market tell you what to do in this situation. But it is behaving well, and it is behaving like a risk-off play. Market's about to close here, so there's the closing bell. Spider's closing at 434.50, right in that range there. We'll take a look at Microsoft in a minute. And silver. So moving on here, so silver having a nice little pullback day off that 200 moving average. You can make a higher low, and yeah, maybe you can go up here and test that 25.50 handle. Platinum, again, just looking like the silver pattern here. A higher low could get you up to that 1100 handle. Palladium, which has been stronger of late, going up into double top, so that may need to stall out a little bit. But nice little move there for Palladium in the near term. If you get through this, then you got upside up to, well, you've got this breakdown area here at 2265. If you can get through that, you got the 200 moving average, and this kind of breakdown area. This is where you started to roll over around 2375. But Palladium hanging in there nicely and holding up in the meantime. Copper did scratch out a gain here, so up 1.1%. But again, just can't get through this 451 area. And I'm starting to get a little bit more kind of bearish on copper. The fact that it's had all this time to break out and then it hasn't been able to. It's a bit of a, if you're not going to break out, you're going to break down. So if it really can't get through this soon, it's just not really the greatest sign overall. You want to see copper be able to get through that, and you want to be able to see it close above that. I mean, it did close above that on a weekly basis. We did get, I believe, we got through that last week, didn't we? Yeah, so we closed above that last week on a weekly basis, and copper's still unable to follow through with that breakout. So not the best look there for copper. I'd like to see it really get going here sometime soon. So let's flip over to Bitcoin. All right, so Bitcoin, just a little bit of follow through from yesterday. Nice little tail candle, and again, a bit of a pause day. You see kind of the same thing on Ethereum. Ethereum much weaker here. Doge did get a pop off of Elon Musk. He tweeted about Doge a little bit, so that got a bit of a bid here. But again, crypto kind of following the equity markets, just kind of in a pausing, kind of a pause mode here. And everything will move tomorrow off the FOMC. Again, you guys know the upside target on Bitcoin. If it can get back up to 40,000 and above that breakdown area, you can get up to 44, possibly 45, where this trend line is, and that's where you broke down from before. I do expect that to actually happen over the next couple of weeks, and that should coincide with a bounce in the equity markets overall. As far as the spiders are concerned, you'd probably be looking at a move at least up into the 450 area, somewhere in that range, and then we'll reevaluate from there. Let's take a look at Microsoft and see if their earnings are out. So Microsoft closing tweet. Yes, it looks like they are out. We flip over here. We'll just take a look real quick and then we'll get going. All right, so Microsoft dumping out. It's down to 270 here. Looks like they just released earnings. Let's see if Texas Instruments is out. Yeah, so Texas Instruments getting a bid here up to 184. Let's look at the daily. Yeah, so getting all the way up to the 20 moving average there. So that's where you broke down on TXN. If it can get back above that area, that'd be short-term bullish for TXN. And Microsoft, let's see, back bouncing up to 275 now, but did get all the way down to 270. So Microsoft not performing that well off of earnings here. Let's take one more look at the intraday. But we'll see where it opens up. So nice little sell-off there, and a nice pop on TXN. Again, who's to say Microsoft doesn't open at 300 tomorrow? I've seen that happen many times. But nice little move there. And let's see what the spiders are doing. So spiders, yeah, spiders taking a little bit of a hit off of that. Microsoft obviously makes up a big weighting in the spiders and the triple Qs, which are now negative in the after hours. Anyways, guys, take care. We'll reevaluate tomorrow after the FOMC and see what the market has done. But anyways, you guys take care and have a great rest of your night.